Good morning. This is Jared with the Helton Group, and today we're going to be lending some knowledge of what's going on in the mortgage market. It's the 15th of November. We kind of had a slower news week. We had the CPI came out where the overall inflation was increased by 0.6%, which was in line with estimates. We got initial jobless claims, which are kind of flat, which is what we thought. Home prices still rose 0.4% in July, which is very positive. And the forecast for home prices continues to increase where they're going to go up. Mortgage applications were up just a little bit, but still down 27%. We're still anticipating maybe some, whether it's a soft or hard landing. So this is a chart that I find very helpful. It's the Feds kind of go to the extremes here. So you'll see the blue line, where maybe you can't see it depending if you're looking at your phone. The blue line, when it gets higher than the 10-year, right after that, there's this gray section, and it shows that the recession kind of happens there. And we're really way past it. If you look all the way over to the right side of your screen, we're way past it right now. So there just has to be a correction where interest rates are going to get a lot lower. But that didn't happen this week. So in interest rates this week, we go to Rate Watch. What we happened in the last 3 days have kind of been flat, which you'll see here. The trend still 2 years, steady climb, highest they've been in like 21, 22 years. And then we look at the loan scenario, which is a conforming purchase with 20% down. Interest rates stay the same, upper 7.99%. Payments are going to stay the same, about $2,771 for that example. And then home affordability is kind of flat. So last week, same $400,000 house. The month before, same $400,000 house. If you look at a year ago, you could buy a $470,000 house for the same price. So buying points, a lot of times that makes sense. In this market, you probably almost have to have points on your loan. Going down to mid 7%, so 7.65, you break even in 15 months. Probably a pretty good investment. I think you're probably going to keep most loans by 15 months. Somewhere between 12 and maybe 30 months is probably what you're going to keep it. And then we look historically back to the rates. So this is back there a while. The rates were a little bit lower. They're 7.24%. This is in June of 2001. We had a Lady Marmalade song that came out. So if you have any questions, we're here to help. Just reach out anytime, even over the weekend. We're happy to do that. We'll talk to you guys later. Thanks.